What's going on, everyone? Today, 63% of the S&P 500 closed down in the red, and we are set for a very exciting day in the market tomorrow as we have a $4.5 trillion triple witching day. Yes, trillion with a T. On top of that, nearly all Cybertrucks have just been recalled. We have recent data showing that the percentage of borrowers at least 60 days late on their car payments is the highest on record, among some other information that you will not believe. So we are set for a very exciting day in the market tomorrow. Tom, let's not waste any time and let's get right to it.
Yeah, the market was pretty choppy today overall with the up and down price action, but there were some good opportunities as it ran up in the morning up to the key 570 resistance that we've been talking about all week. It rejected right back off and bounced off key support at 564, kind of stuck in a range right now. We'll be talking about SPY a lot throughout the video, but Tesla had some negative price action today as there was news that their trucks were recalled, and it's not like they're just recalling some of them. They're recalling all of them that have been sold in the first 15 months, essentially all of them anyways, and it's pretty wild here. Their body panels are falling off. We have a nice video here kind of demonstrating how negative these panels are. We can see that there was obviously glue that held these panels on, and some people are speculating, what type of glue was Tesla using? I don't know. Personally, I think this was the type of glue that they ended up putting on there. The classic Elmer's glitter glue, Mike, but this is pretty wild for Elon. I wouldn't have thought that you just glue body panels on like this.
Yeah, I think it says a lot how they have to recall basically all of their trucks, and clearly the market does not like to see that, and I think it just adds on to the negative bearish sentiment that has been associated with Tesla and Tesla stock recently. As we look at Tesla right now, Tom, what are the key levels to watch for this one? Because, it has lost 50% of its value in recent months, and, a lot of investors are getting a little worried with this one.
Yeah, they are, and it has been trying to form a base in the short term. If we go out to an hourly chart, you can definitely see how much it's been falling in the short term, but zooming in down here, there has been a pretty good bottom down around 215 to 216. I'm definitely going to keep that on the radar, and I do like this other peak around 222 where it formed this higher low, and then even over the past couple days, it's been trying to hold 230 as of this morning. So I'm definitely going to be watching 230 for tomorrow. This was a crucial area of support. We can see multiple touches off of this level with Tesla in the short term. I would say if we are really able to rip above that peak of this week around 242, we could maybe see some bullish price action come in, but given all the negative news, I'm not really leaning that way, but then again, you never know in the stock market.
Yeah, and I would have to say if I had to pick one level for Tesla, it would definitely be that 230 area. If that gives out, that would break that higher low pattern that we've seen in the short term, which has helped quite a bit. And that would, maybe even open up some new short opportunities. But we'll see. 230 is definitely a key level to watch, though. But in addition to this Tesla news, tomorrow is also set to be a pretty exciting day because we have a $4.5 trillion triple witching day. So basically, for those of you who don't know what that means, essentially we have a bunch of different contracts out there, let's say options contracts on individual stocks. You could say options contracts on the S&P 500 index, and even with ETFs, and they are all set to expire tomorrow. The total value of all of these is $4.5 trillion. That is a lot, and when essentially what that means is that there's going to be a lot more trading and activity tomorrow. This doesn't always mean that the market has to move more. Of course, it certainly can, but with big days like this, it is certainly worth at least acknowledging and being aware of because there's just going to be a lot more trading and action happening overall.
Oh my gosh, you're telling me there could be more action than what we've already been seeing? Is it even possible? The SPY on some of these intraday swings to the upside today, that was a 1.4% run to the upside, and then, oh my gosh, pretty much gave back all the gains there into the end of the day. We've been seeing a lot of craziness right now in general, and this is definitely going to be a big thing that could end up adding to the craziness. I'll be honest though, guys, I try to really act on these triple and quad witching event days, nothing's going on. I really just try to focus on the intraday price action and just follow the momentum and follow the money as always.
All right. And then, like, Tom, as we know just from like recent action, we definitely are starting to see more and more cracks form, not only with the stock market, but also the economy. And when I saw this headline today, I seriously couldn't believe it. You can now finance your DoorDash fries, believe it or not. We have Klarna that landed a deal with DoorDash that will basically let people buy now and pay later for their DoorDash meals. So I think this says a lot in multiple different ways. It definitely makes me a little bit nervous for the economy overall. But yeah, I never thought I'd see this happen, Tom.
Oh my gosh, I'm going to split my McDonald's order tomorrow into 4 equal interest-free installments. I could end up seeing people even financing their DoorDash and everything. And I'm sure people already do that with credit cards. So who knows? But at the end of the day, definitely some funny news there, Mike. And whenever I thought about this, I was instantly like, wow, is that going to help DoorDash stock? And I went and looked at their stock today, and it looks pretty good. You know, I like this 195 peak it had. It had good price action overall. And for tomorrow, if it's able to break this 195 high of day from today, it's not very far off that $200 key psychological resistance.
It has been running pretty nicely, not only over the past few weeks, but even over the past couple of years. And I do think that there is a little bit of room up to that 200 level. So either way, keep this one close on watch. I'm sure the recent news can help it a little bit, as we've seen today. But Tom, in terms of just general economic fears right now, I saw some pretty scary data today showing that the percentage of borrowers who are at least 60 days late on their car payments is at the highest on record. As we can see by looking at this data here, not only is it at the highest on record, but it is also continuously uptrending, and it basically has been for the past few years. And while this news by itself isn't directly applicable to any specific stock, it definitely does worry me at least a little bit with just the economy overall.
Yeah, me too. I mean, we're going to have a lot of car repos going on and stuff like that. Hey, I guess now's a good time to be a repo man, right? Maybe somebody will have to pick that up as a side job, but nonetheless, it's definitely a bad thing to see for the overall economy, in my opinion. Nobody wants to be seeing that. And at the end of the day, it's kind of like whenever you see credit card delinquencies rising as well, right? It just shows that there's a lot of pressure on consumers right now, and a lot of people right now say that we're currently in a recession, even though obviously a lot of people also say we aren't.
Yeah, there's definitely an interesting divergence we're seeing right now in terms of the economic outlook, which as we look at the AAII sentiment data, which basically shows how people are feeling about the market right now, we can see that bearish sentiment is at a pretty significant level right now. Bears outnumbered bulls by 40% in the latest AAII survey of individual investors. This is a level of fear that exceeds 99% of historical readings. And in the past, we've never seen, this level of bearishness outside of a bear market or a recession. And we can see the last time that it got this low was, the bear market of, let's say, September of 2022. And, other historical points throughout history, like the Great Recession of 2009 and even, the giant recession that we saw in 1990. So again, a little bit alarming.
Yeah, definitely. And whenever you see that type of stat, it makes me think in the short term, wow, are we going to see a continuation to the downside? I know that that's something that a lot of traders are looking for in the short term. It's not necessarily something that I'm looking for, but it is something that I am watching for. I personally like this dip, and I think it's a good opportunity to start the dollar cost average in. But whenever I start to look at the SPX chart, it does worry me. What if we do actually get into that bear market territory? Things aren't going to be looking too good.
No doubt. And of course, no one knows with 100% certainty, because as we can see, if we look at the past 39 corrections, only 13 of them actually ended up turning into bear markets. So you could say 66% of the time when we had a correction, it just ended up being a correction and not a full-on panic mode bear market. So historical odds are certainly in the bulls' favor. And while no one knows with 100% certainty what's going to happen this time, it definitely makes sense to, buy the dip incrementally, but at the same time have a healthy level of skepticism where, stocks can fall even more. So I think it's definitely a good idea to leave some cash on the sidelines in this type of market environment.
Yeah, me too. And I know a lot of people are like really worried right now that we could get into that correction territory. And I feel like that with everything going on right now, there's definitely a lot of fear of that. I know the stats don't necessarily support it, but even Trump is worried right now. Like he's even out here saying that the Federal Reserve, as of today, needs to cut rates because of his transition with the tariffs going on. So that's pretty insane. I know a lot of people are saying that these tariffs could really put a lot of pressure on the economy. And, Trump's talking about, Powell essentially, cutting interest rates. And he said that April 2nd is Liberation Day. We can't forget that April 2nd is whenever a lot of these tariffs are going to go into action.
Definitely. So yeah, the trade war isn't really set to slow down anytime soon. We will continue to monitor the situation very closely, as we always do. But looking at the market in a more immediate sense right now, Tom, SPY keeps retesting that 570 level, and it keeps getting rejected time after time. So what are the key levels to watch for tomorrow, and what are you seeing in terms of the charts?
Yeah, it's getting pretty funny at this point. Like today, as it got to 570, I was like, wow, we might actually get a breakout this time. We've already tested it 2 other times in the past like 5 trading days. And guess what? It rejects again. It was a pretty crazy rejection there intraday. So I think 570 is definitely crucial. I do like 572 and 575 overhead as some pretty solid resistances. But even as support, I talked a lot about yesterday, 564 being a potential amazing support. That's been a good resistance, and it's going to act as support. That was a good low of day today. And even around market open, this like low right around 562.50 to 562, I think will also be pretty crucial. We've seen a lot of bounces at that level this week as well.
Sounds good. And we have been making higher lows, which is definitely a good sign. If we break this higher low pattern, which I would say like, even like 564, if you want to get like really aggressive with it, that is like a key area where like if that breaks, that definitely would be a somewhat concerning sign. But like 562 is definitely key as well. So, I think it's worth keeping multiple levels on watch. As always, the more pressure SPY puts on its highs, the more buying it brings in, the more short covering it brings in, and the less short selling it brings in, let alone all of like the behind the scenes hedging and everything like that. The main point is that the more pressure the market puts on its intraday highs, the stronger the rally becomes. And of course, vice versa to the downside. So keep that in mind. But looking at tomorrow's schedule and earnings, Tom, what do we have going on with those things?
Yeah, on the economic side of things, I mean, there really isn't much. There's a Fed Williams speech tomorrow morning, but let's be honest, there probably won't be too much with that considering Powell spoke this week. And then on the earnings side of things, there were some earnings tonight, like Micron and Nike and FedEx. They were actually moving pretty well. And NIO and CCL will report tomorrow, which will be some pretty interesting stocks. But looking at these earnings from tonight, MU and Nike had some pretty decent price action. I know MU was popping up tonight in after hours quite a bit, hitting around 110, and Nike was moving up quite a bit as well, but got a little choppier.
All right, so we'll keep on the radar for potential continuations tomorrow. And besides that, we'll jump right into some setups and predictions. A stock that is definitely on my radar is AMD, and it is to the upside. This stock has been struggling quite a bit over recent months, and it is starting to gain some of its bullish momentum back. The 108 resistance area is like the key level I'm watching. If we can see a clean break above that level, it is definitely going to be on my radar for like a potential bullish scalp play. Either way, I like the momentum that it's building, and I also like the fact that it is towards like the lower end of its like historical range.
Yeah, it's a pretty big range. Like we go out to the daily chart and it's been dropping off quite a bit, but the base that it's forming and it's starting to pop up in a pretty decent way. So I like it quite a bit, Mike. I will keep watching it as well. We might have to change the name of this one to Advanced Money Dispenser instead of Destroyer here in the short term. But with my first setup, I'm looking at DraftKings to the upside in the short term. I am watching a pretty key resistance here for tomorrow. I do like this double top right around 39.30, and I'll be looking for a breakout with that. Of course, March Madness is going on right now. Maybe that could add some hype into DraftKings. Sometimes people, they like to look at these betting stocks during times like this. I'm not really looking at it necessarily for March Madness specifically, but I do like that double top, and if we see that break, I'll be watching it to the upside.
Sounds good. Another stock that is definitely on watch is Boeing, and it is also to the upside. I mentioned this one in yesterday's video, and it didn't really do anything too crazy today. It was more of just like a chop slash slowdown day. It is getting closer and closer to that $175 area of resistance. It even has like a more like minor level around 174. If we can break through these levels, Boeing has a lot of potential. The stock, when it actually has momentum and news, it can move in like a strong, clean way, but at the same time, it needs to have like real momentum behind it. If it's just chopping around and not really moving enough, then it's really hard to justify. So Boeing is on the radar, but don't feel the need to force a setup with this one unless it's like actually moving with momentum. Again, 174 and 175 are the key levels to break, but of course, there's nothing wrong with entering even earlier than that if you want to catch some like quick scalps.
Yeah, I really do like that 175 level. If we end up breaking that, that could be pretty awesome. And like if we go to Boeing on the daily, you can see how there's a few of these consolidation days on the way up like we saw today, followed by a lot of amazing candles. So I'll definitely keep it on the radar again. With my next up, I'm looking at Carvana in the short term. This stock has had a lot of great momentum, especially like at open today, and it's pretty close to a key $200 level. For tomorrow, I'm going to look to buy up this dip at the end of day today. I really like how it came down to test the high of pre-market, and I'm going to use that as a really good support. If it starts ripping under there, I might do a no play until we start to get some good bullish momentum going on this. But looking at the book map here, there's not really too much overhead. I was actually expecting there to be a lot more sellers lined up at $200, and this gives me some good hope that we could maybe test 200 and maybe even break it over the next couple days. But remember, the market doesn't run on hopes and dreams, so I'm definitely still watching 200 and respecting it as a solid resistance. Don't necessarily bank on a break of that.
All right, sounds good, and it's also a key psychological level as well, so I will keep this one close on watch. And besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have TDOC to the downside.
Yeah, Teladoc ended up falling through a major support that I was watching today. If they break under $8.15 tomorrow, keep watching them down.
All right, and then with the next one, we have APP to the upside.
APP, if they can break out above 315.50, then keep watching them up. They've had a lot of good momentum in the short term. They just broke above 300 and held it today.
Beautiful. And then with the last one, we have Roku also to the upside.
Roku in the short term, they've been stair-stepping back to the upside here. If they can break out above 75, then keep watching them up as well.
Alrighty, so we have ROKU, APP, and TDOC all on the radar for potential continuations tomorrow if and only if they break through the levels listed. The stronger and more consistent these stocks move, the better these setups become. Remember, smart trading habits are more important than anything else. Have stop losses and respect them. Follow the money, size positions reasonably, among many other important little trading habits. You can learn all about this and much more in the Key Lessons channel of the StockedUp Discord for free. So definitely check that out. But besides that, Tom, let's jump right into today's $428,000 big money trade. And we are looking at ticker symbol TTD. Today, the big money bought the 55 strike call options that expire on May 2nd of 2025. TTD is like a digital marketing and like advertising company that has been crushed over recent months, and it looks like the big money here is happily buying this dip. We can see that these call options are already in the money, and they have like a little bit over like a month's worth of time to them. So, it's definitely like a shorter term play, but it has enough time where like time decay isn't like too concerning at the moment. I love how the stock has been cleanly and strongly trending over the past few months, and I also like how close to recent support the trader here is stepping in. I really like the reward to risk and the fact that these options are already in the money, so this one will definitely be on the radar.
This is a pretty crazy support level on TTD for this trader to step in at. I gotta say, this is a wild daily chart setup. I don't know that I've ever seen one this wild like this in the short term right here. This was a crazy gap down that they had on earnings, and it's been pretty much straight to the downside. I could see the dip getting bought up, and the cool thing about this trade is that it's not like we have to really expect somebody to like buy the dip all the way back up to like 120 or anything like that. Like these are the 55 strike calls down here in the money at the bottom. All we really need is just a short-term little pop back to like 70, 75, maybe even 80, something like that. Maybe to where it started to gap down at. That would be a pretty big level that I would watch out for. But either way, this is a pretty ballsy trade here by the big money, and I can see why they didn't put millions of dollars into this one. That's for sure.
I'm excited to see how it does, definitely, especially considering how badly the stock has been downtrending and, the fact that it does move pretty strongly and cleanly. So either way, keep this one close on watch. But before we continue on, we have to give a giant shout out to today's member of the day, Stackin' Racks in the Stocked Up trading floor, who had a great post today showing some amazing gains and other nice messages in the profits channel. So huge shout out to you, Stackin' Racks. Keep on rolling, and hopefully we see many more screenshots like this one from you in the future. If you're into short-term trading and you want to access the Stocked Up trading floor, where you get full access to our army of trading robots, our daily big money plays, you can chat with Town and myself all day long, access our weekly live events, among many, many, many other channels, features, and benefits, then definitely check out that first link in the description, in the comments down below. It is the place to be if you're into short-term trading, and we're always adding more and more to the community. But besides that, we're definitely set for a pretty exciting day in the market tomorrow. Of course, all the Tesla news definitely was interesting among the other events and topics that we covered today. So we have one more day left of the week. Let's make it a great one. Thank you all so much for watching, and let's crush it in the market tomorrow.